Our bull thesis has played out as per expected, and it appears as though the upside has just begun. There are several bullish setups spread across the medium to macro timeframes that support our quarterly timeframe V-shaped recovery. Welcome back to the channel on this happy Friday. This is ARCa, and let's dive into ticker symbol TTOO. Let's kill 'em, team. What is up, you guys? Thank you so much for stopping by once again. Let's go ahead and dive straight in to ticker symbol TTOO. And what you're observing here is actually the daily chart. So let's go ahead and try to make this as fast as possible because there's obviously a lot to talk about, right? So at one point, the price action on the 12-hour time frame reached a top side of right up here on the OHLC, open, high, low, close. You can see on the H that we reached a 28.46 top, right? So I don't want you to feel afraid over why that actually happened there, but if we observe this on the daily time frame Gaussian channel, you will notice that the top side target here is 28.52, which is the test that we actually just realized on the 12-hour time frame. It was actually for the daily Gaussian band, right? So it got, of course, it got a little bit of a pullback here, but it's no problem. The candle that closed here on the daily time frame is critically important as well. And the reason why I'm telling you that is because when you have a formation built of, a candle falling to the downside like this, then you have a really lonely candle down here, right? And then you have this massive green one or a recovery candle after that. This actually identifies a very silly candle formation name. And this is actually a bullish abandoned baby candle formation. All right. So this is pretty much what constitutes that, and that usually signals a potential upside continuation. Now, if that is the case, then there would actually be a reason to actually long the market at, it's usually said to long the market at the wick high of the following candle, right? So in practice, I guess it would be 26.48 entry upon the next candle opening, right? So I can actually show you a quick little example here. So let me just go ahead and pull up my portrait screen next to me. And this is it right here, right? So what you're looking at here is the abandoned baby candle pattern. Ever so slightly different than what we're looking at here, but very much in play. Okay, team, and that actually suggests a continuation to the upside, right? So it's pretty bullish, all right? So let's go ahead and now take a look at the next thing here. So let's pull up the Gaussian bands one more time and move down to the 8-hour closure inside of the Gaussian. So yeah, please notice this right over here. We actually have this candle, it officially closed perfectly within the inside of the Gaussian band. So that means that there is a shot here of continuing on to the upside. I do have to show you a potential play though, right? Because there may actually be a pullback. And the reason why I can actually identify that pullback is for a couple reasons. First of all, the 12-hour time frame creating a shooting star up here, right? So usually when you get this shooting star, there could be a short-term time frame pullback before a continuation to the upside. But I must say that the 8-hour time frame actually closed with a bullish engulfing candle formation. Please notice this. I'm just gonna go ahead and state that I don't usually like when bullish engulfings print during an upside. I would really like them to print during a downside, right? And that would be a better validator, right? But that would be the formation right here, right? So just observe these two candles here, right? Let's go ahead and get the drawings out of the way. And bullish engulfings happen when the forward green candle engulf the body of the prior red one, right? So you can see here that the red is well within the bounds of the green body of the forward candle. That's what constitutes bullish engulfing, and the fact that it would be built after a downside. Arguably, it is, but it's also during this shorter time frame upside. So that's what kind of gives it a little a little confusion here, right? But it's there, and it's, if the sentiment so believes that it is there, or the overall psychology behind TTOO, then so be it, right? So let's go ahead and now take a look at the notes here and continue onwards and forwards, right? So this is the weekly bullish buy formation. This is a very powerful signal, team. I'm going to go ahead and bring that up right. You know what? I think I could, I think I could just do it here. Let me go ahead and get rid of the Gaussian bands, and let me pull up the weekly time frame, because this is a very powerful setup, team, right over here. Okay, so again, except this time it's actually playing out the way it should play. Downside, bullish engulfing, right? Weekly time frame, very powerful. All right, so now please notice the red candle being engulfed by the forward green candle, right? So that's already a very, very, very bullish setup. Now, why would ARCa say bullish buy formation? Well, simple. That is because of this candle here. This single candle is a hammer candle, right? Only the hammer candle is only built after a downside, and it is right here. And that hammer candle usually signals a reversal, and of which we're already facing. The confirmation candle for this would be the following candle. If the following candle does show green and it closes above the opening of the prior candle, or the range usually, then that's a confirmation candle, and it would be a candle that would suggest a continuation to the upside upon the next candle. In this case, we got the weekly closure for this hammer, we got the weekly closure for the following validation candle, and guess what? Bullish buy formation, right? So that is what I'm looking at here, team. It is looking very good. And right, so I haven't announced it on TTOO, but if you are interested, right, I have opened up 30 seats for my ARC Masters course, and please get in touch with me at arcmasterscourse@gmail.com. And I will go ahead and pass you the package, the syllabus, the disclaimer, all of the information, so that you know how to get enrolled. I've promoted it for now, I think 4 or 5 days, and already 14 seats have been claimed. Okay, so make sure to get yours, because I'm not going to be able to do more than 30, right, team? So yeah, let's go ahead and continue on the analysis here, because there is much, much more to talk about. But there is the email, arcmasterscourse@gmail.com. Okay, team. So now next we have a 3-day bullish divergence playing out, right? So this is what we spoke of right over here, and this is the opposition of price action versus momentum. I'm just going to remind you exactly what that divergence means, right? So you're looking at price action creating from a pivotal point using momentum, right? So this is that little pivot here on momentum. We actually got this line to start and touch down at this drop here. Why? Because there's another pivot right over here. And this, team, is the reason why we were able to tell that there is an upside coming in, because of a divergence, right? So in this case, divergence represented by this indicator, RSI. This is my personal script, just so I can show you colors, right? But it's a standard RSI, right? You have your overbought levels above 70, oversold levels below 30. And except that I just have the bullish control zone upper half, the bearish control zone lower half, and then you have your bear strength percentile and your bull strength percentile, and weakness percentiles in the inside. Right, team? So yes, please notice here that there are several of them, actually. I just pointed out one because that's really all I needed, right? And it was actually the pivot, the pinnacle. It was the one. It was the flagship, right? So this one right here gave it away, and it would suggest a continuation to the upside. Now, upon the 3-day chart here, okay, because this was very important for us to identify. I said that this was it was potentially a hammer candle after a downside on a 3-day time frame, very, very distinct from the weekly, not the same. Okay, so in this case, we built that hammer candle on a 3-day, right? I said on, I think last week, I don't know, Friday or Saturday, whatever that was, that the following candle would be the validator for a continuation to the upside if it does close upside of the opening range, right? So we definitely got that. And the next candle, I got a funny guy actually asking me on Twitter or on X, right? I hope you're there, bro. I hope you're there listening to this right now so you can see just how it works out, right? You're a funny guy for actually asking that, right? And I did ask you, so make sure to reply to that. Reply to that when I said what happened to it, right? He said, "What happened to TTOO, bro?" With a laughing, with a whatever, right? And I replied, I said, "I don't know what happened to it," right? Well, you tell me. Look at this damn price action. But whoever did follow me on this got their entries at around 1830. For example, one person. And today, actually, another person came up and said that they got the entry at 20 cents from where I spoke of, and then they actually realized some profits right at 26. Well, guess what? 26% play, right? While doing nothing but waiting, right, my bro? And then the other person got an 1838 entry right where I said the bottom would be. And guess what? That person's up like freaking 30% right now. Man, oh man, what happened to TTOO? What happened to TTOO? I don't know. You tell me, right? So that's why I tell you guys, come on, man. Come on. No. Just let it play out. We're talking about a 3-day chart here, right? It's not going to happen one day to the next. All right. So yes, we got the validator candle. The reason why this candle came down is, of course, to confirm the support, right? The support reversion. So that's what it did, right? And then that's what I said live. I said, guys, if we're going to test anything, it's going to be 1838 down here before a continuation to the upside. I personally would not gain an entry just yet. I would wait for the confirmation here because that's how I trade. I trade based on confirmations. All right, team. So I was honestly thinking that we can potentially get entry here at 2069 to 1961. I'm not sure that can actually come all the way down there, but we still have to observe that. Another target to kind of put into play here would actually be the area of about 24 cents, right? So I would say 23.94. And I guess this could be one of those zones where you can average in, right? So that 23.94 is very particular, right? So let me just kind of draw it in there because I do see a range here that price action can pull back using the 12-hour shooting star, right? So if there is a range here, I mean, it's kind of a large one, right? I'm not sure that we're going to be able to reach all the way down there, but there appears to be a focus, though. Well, you know what? I guess we can... No. I'm not going to take that into account. Let's just go ahead and continue on here, right? So, yeah, there is the off chance, right? Since we are at a critical resistance right now from this 3-day falling wedge, that we can open the next candle within the 24 or that 23.94 or whatever that is zone right here, and then actually come back down to either face 22.27 before an official breakout, or if phase 2069 to 1991 before an official breakout. I have two targets just for us to evaluate, right? So I'm not saying that we're going there. I'm just saying that there is a probability based on the 12-hour shooting star bearish candle, right? So that is it would be just a shorter term play, to allow some of the bulls to get long the market and then take it onwards and upwards. Now, if you don't remember how this wedge works, I said that we would be breaking out on this 3-day candle here, and it looks like that may be the case, right? We already closed this 3-day candle here. Upon this Monday, we're going to open this candle here, and then we're going to see how that moves. The first target, upon a real breakout, is said to be right up here at about 35.40 based on a trend line that would take into consideration. Actually, I did it ever so slightly. I think it was too bullish to do this, right? So I'm going to have to go ahead and adjust this to this candle here, right? So let's adjust that target and go ahead and apply it right to that area of breakout, which would actually be right over here. So let's adjust those targets. But guess what? The target is still coming up to the range, 31.31 at the first area, right? The next candle, let's go ahead and adjust this too. This would be the center of the triangle. I actually don't think I may not have to do this. Maybe, right? Just a little tiny adjustment here. And this may actually tighten up some of the targets that we're getting, right? So now, yeah, since this is a supposed area of breakout, we can go ahead and now apply that right over here, and still suggesting that bottom side of the target, 40.42 to 43.96. And of course, taking a trend line from the top side of the triangle all the way to the bottom side of the triangle, that actually would take us to this next target. Let's go ahead and apply it to that same place, right here. And then we apply it just like this. And guess what? Taking us right to the center of this range, which is 58.97 to 65.27 with a focus at 61.85. I'm going to go ahead and note that right here. Again, I don't know that we're going to go all the way to 61.85 on one sitting, right? Chances are is that we're not going to do that. But it's good to note, and it's good to have that there. Now, to pair these targets here with geometrics, please notice that it is tight, right? So we're looking at this topside target of 32.01. Look at the 2 fib at 31.94 from the first target, right, from the breakout. Second target here, it is suggesting 41.09, and look at the 2 spot 618 golden mean at 40.36, right? So that's that's pretty tight. The next one here, the topside target, yeah, it's suggesting 61.85, and we have 58.94 at the 3 spot 618. So the 618 targets are looking very nice. And one more thing, check this out. We talked about earlier in the session, we spoke about let's see, was it on the daily time frame? Gaussian band. Let's pull that up. The resistance we faced up here, 28.51 or 28.47, whatever that was on the price action, right? Let's look at the 12-hour and see what that was. This candle here, that had a high of 28.46. Well, if we come back over here and start to notice what 28.46 even means, well, you'll notice that like less than 1 cent is the 1 spot 618 at 27.64. 28.46 was right here. Look at this. Right there. That's 28.47. We came up to that, resisted from the 1 spot 618, and came back. Geometrics matter here, team. And not only that, I'm going to go ahead and point out something super, super important right here, team, because this is something that I mentioned on a live, but I actually did not get to cover it. So the zone that I'm about to draw between the 0.618 Fibonacci ratio and the 0.382, that is called the golden pocket. And it is a very bullish area to be in, a very bullish area to bounce out of. Now notice where we bounced out of. Here's the candle here at 1838. 0.5 at 1810 in the center of the golden pocket, and bam, right? So this is why I practice mathematics. This is why I combine them with discretion and whatever else you want to call it, right? And the last thing, and the last part of this analysis is actually this right here. We are prepping a massive breakout on this thing, and this is actually the daily descending broadening wedge, right? So we are practicing right now test number 1, 2. Guess what? Test 3, reclaim the inside, and test number 4. We are now breaking out on true test number 4, right? So now what would happen if we came back down to validate that support? One more time. Well, if we did that in the next day, well, the target shows to be around 1947, right? If we do get that pullback. Now, why does that sound familiar? Well, that's because we already jotted down the area that we may see as a potential support bottom right here, 1991. And we were just looking at the broadening wedge at 1947, right? So yeah, there is a probability there. Okay, team. So I just want you to be aware over what's happening here, right? So now if we're going to practice this, right, it's going to take some time for it to do this. And I think this honestly may be easily months, right, for it to actually realize this. But the take profit for this formation is located at the genesis of the formation, and guess where that is? $8.34, and that is looking mighty, mighty promising. Now, if we look at the quarterly chart, because that is the quarterly chart where we signaled that we could potentially be in a V-shaped recovery, which is, by the way, happening. Here it is. This is what it looks like right now, right? From the last time that we came and observed this, right? Now you can see that we're actually going up, right? So $8.34. What does that even mark? I don't know. I'm actually asking here, and I want to see what it is. Okay, well, it's the junction between these 3-month candles here, right in between, right? So the closing of this candle here is 807. 807 here, and the opening of this candle here is 857. So right in between there, the 834, that is where it's being suggested, right? So yeah, I think everything is looking good for TTOO. You know my targets now. I do think that there could be a short-term pullback before a continuation to the upside, of which where I think we could start testing the top side of around 29.50, right? So yeah, I think that may be in line. I will say that there's going to be a tiny little bit of a focus within this range here, and that is because of one tiny detail. There is a daily gap right here that still needs to be filled, right? So first, we're going to resist from there first. I don't think that this price action is going to go up into, clearing this gap immediately. I do see a resistance coming from 27.55. Again, that's going to be, that's your geometric mean at the 1.618. Actually, it would be this one here, right? So let's go ahead and pull that back to the daily time frame, at least that. And pull it up over here. 27.55, we said. Yeah, right, check it out. 27.64, 1.618, another resistance right from there. In fact, we did 28.46 today. Oh, we did 28.46. Let's see, did we cover it? Oh, we did. We totally covered it. 28.46. We did it right up here on the 12-hour time frame, but it is a daily gap, so we haven't actually touched it. So the daily time frame is, the daily time frame, I see that we can actually resist from 27.52, to be fair, at a 28.05 bottom, right? So from this area here, I do suspect that we can get that pullback that we're looking for using the 12-hour retracement candle. Right, team? So now you know what the play is. Now you know where the pullback targets are. There are no excuses. All right, team? So I really appreciate everybody for listening in this long. I know that it's a long video, but there's a lot to explain. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well. A very, very good weekend, and I will catch you at the bell on Monday. Adios, team. Yeah.